Hi, my name is Ruperto Ancajas. I'm a portfolio specialist at Fort Asset Management. On my right, we have Brian Assis, a portfolio manager at Fort Asset Management Singapore. And today, we are going to be talking about ESG and what it means to Brian, to Fort, and to the management of portfolios and strategies here at Fort Asset Management Singapore. So Brian, what is your understanding of ESG?
Yeah, I think it's a great question, Roberto, to start, just to set the landscape a bit. But I mean, in its simplest form, it's simply taking E, S, and G, environmental factors, social factors, and governance factors into account when you're analyzing a company or a security before including it in the portfolio. And that can be as simple as looking at the environmental impact that a company's operations may have. Also looking at how well they treat their employees, for example. Are shareholders treated fairly, which would be a governance aspect. So it's simply taking each of those into account to varying degrees and integrating them into your investment process.
So why do you think ESG has gained prominence over the last 10, 15 years?
Yeah, I think it's for a number of reasons. But if you take a step back and look at consumers in general and in our everyday lives as well, living sustainably has grown in importance and interest over time.
That's right.
That's fueled an interest in ESG investing kind of generally. Investors themselves, financial services firms, also have realized over time that there is a financial impact to not taking ESG factors into account when investing in a given firm. If a firm is pollutive, for example, and a company has to pay to clean up that pollution, there's a very real financial impact. So investors are also taking it more into account over time. You also have companies, in large part a push from consumers and investors, releasing more data about their own kind of ESG credentials through time. So if we look 5, 6 years ago, less than a quarter of companies globally kind of formally released annual ESG reports. Today, that's upwards of 70%. And really that's also being driven by standardization. So regulators, whether it's the MAS here in Singapore or European regulators, for example, are pushing companies to standardize the way in which they report and forcing them to report more data over time. So really, for all of these reasons, it's been a steady march forward and will continue to be one. And that's why it's increased in prominence over the past kind of 5 to 7 years.
Okay, so well, then going forward, or at the current state, or which is more important, the E, S, or G side of things? Because depending on the sector, depending on the person, different things could mean different things to people. Yeah.
I mean, it's quite subjective, and it really is. I mean, ultimately up to the investor themselves or to the portfolio managers to take into account how they want to incorporate each of these factors into their own portfolio. But from a financial standpoint, I mean, it can be equally detrimental to have to clean up kind of past pollutive behaviors, for example, as it is to have to deal with kind of consumer disappointment or consumers moving away from your brand because you haven't treated your kind of either labor partners or own employees fairly. Right. And from a governance standpoint, if governance isn't properly in place at a firm, then minority shareholders, for example, may not be protected, and management or owners could abscond with the capital. So I wouldn't really put one above the other, but collectively, I mean, each of them are very important.
So in your experience, when you see a company pursuing a very active ESG strategy, do you think that sacrifices revenue growth?
No, I think it's very company specific. And so we wouldn't say, I mean, obviously there are renewable energy companies that you could say are pursuing kind of impactful ways to improve the environment over time or reduce greenhouse gas emissions. Right? So, but that's a business model that is designed to do that. So it wouldn't be sacrificing growth. In our minds, not paying attention to these factors would be more likely to be costly over time going forward. So it wouldn't necessarily sacrifice growth to focus on doing things sort of properly, but you might be and probably would be at kind of on the financial back foot if you ignored these factors.
Okay, well, thanks for that. And could you also tell us more about greenwashing and how you can spot greenwashing. What is greenwashing, actually?
Yeah, I think greenwashing, I mean, it's a moniker used across the industry. And it basically means that either a corporate or a fund manager is saying something about their ESG credentials that they're not actually doing. So it can be at the corporate level, they're releasing data on an annual basis that isn't necessarily accurate, it overly states improvements that they've made. And at the fund manager level as well. I mean, fund managers claim oftentimes to include or incorporate these ESG factors into their own investment philosophy and process. Right. But ultimately, those claims are difficult to verify. Now, I think going forward, the industry is benefiting from more standardization moving into this space. Regulators, as I mentioned, I mean, on different continents, pushing to standardize reporting. And to make not only the factors that investors look at more transparent, but to make each of them more kind of formulaic. So the hope over time is that the data that you receive, either from a corporate or from a fund manager, will be kind of more verifiable and therefore really reduce the level of greenwashing going forward.
Okay, so going forward, is it important to have some sort of an ESG strategy when picking stocks?
Yeah, so in our minds, I mean, at Ford in general, we're quite pragmatic about how we invest. So, I mean, my sense and our sense here at Ford is that 5, 10 years from now, even in the not too distant future, there will be less of a distinction between ESG labeled funds, for example, and non-ESG labeled funds. And that distinction will go away because everyone will need to incorporate these factors into how they invest. I mean, if we take Singapore as an example, financial services companies, including Ford, need to report to the regulator how we incorporate ESG factors into our investment process, regardless of whether we have a fund that is labeled as an ESG fund or not.
Thanks, Brian, for your time today. And everyone, ESG continues to evolve, and that's a topic that we'll explore further in the future.